friends, welcome back to my channel Infinite Trade. My name is Robin and let's do a Nifty and Bank Nifty analysis for tomorrow. So, the next week, it is going to be a trend deciding week. So, why a trend deciding week? Because if you look at the weekly chart, and if you all remember, after this big red candle, which broke the previous swing. So in Nifty, the previous swing was somewhere around 17,700 in that range, and this red candle broke down. And I told you that whenever we see a big red candle, we will definitely not see a follow through in the immediate next week. And that's what has happened. There is no follow through for this particular red candle. However, in the weekly candle, we see a green candle. Okay, so this low that we have 17, so this is, to be very precise, it should be around 17,800 and so on. So next week candle, if it continues to close above 17,800, that means Nifty can continue to be bullish. Okay, so then this breakdown could be considered as a false breakdown, and the market immediately showed a recovery, and it is continuing further. This will be our the take from whatever we see from the price action. So similarly, Bank Nifty, it was holding this level of around this 41,800. Okay, and it broke down with a big red candle, no follow through, and now we see something like a piercing candle pattern, which is a bullish reversal pattern. However, like this also has to give us a closing above 41,800, 42,000 on a weekly candle. Then it will continue to be bullish. Then we can expect it to touch the all-time high or even surpass it if necessary. So this is so far in both Nifty and Bank Nifty. So next week could be the trend deciding factor. And if it doesn't give a close and we see a red candle, even a red candle tomorrow or day after can put Bank Nifty and Nifty both back into the bearish zone. And however, on a longer time frame, if we see a red candle on a weekly chart, that is the next week, if it puts a red candle or a bearish candle, then we may continue to be bearish. Okay. So now, before we begin the intraday analysis, let's quickly check out the participant data. So the participant data looks a little interesting. FIs have closed about 1,667 long. Okay, so what does that mean? They have booked some profits in the long positions that they added in smaller batches. We saw that a couple of days before, and then they have closed about 26,597 shorts. So this is a huge number and a good number in case the market, if it has to stay positive. Okay, so finally they at least managed to close about 26,500 index shorts. So this shows bullishness. Okay, and then the second thing is after a long time from FIs, I have seen such a big quantity of put writing. So they have almost shorted about 1.4 lakh puts. So 1.4 lakh put shorts, and they also have some call shorts, which is about 17,375. Okay, so this is fine. So we have support created from FII at least for the coming week, and similarly we also see short positions taken on the put side by pros, and they also have some call long. Okay, so as per FII, what can we see is sideways to bullish. Okay, so why sideways to bullish? Like I've always told you, if there is put short means market is not going to go down. Well, but that doesn't mean that market is going to go up. Okay? And similarly, they also have a little bit of call shots, so they may want to play around with the volatility or the delta decay. No, because the premiums are pretty decently high, so they may want to play around with the premiums. So that's the reason they have created such a position. But definitely, both of them have sold put means there is support in the market. They'll at least defend the position and they'll not allow the market to fall down uh, at least for tomorrow. So tomorrow, whatever trades that we have to plan should be like something like buy on dips. So whenever market gives you a dip, you should always look for a bullish entry. Uh, Reverse entry can sometimes put you in trouble because you may enter a couple of times and it would have given you money, and then you enter on the third time and probably there is some data set up on the option chain in such a way that the market is about to give a breakout, and then you will be stuck. So, and it is always better to be on the side where these big players are, so that our mind, doesn't get affected because of any opposite positions. So, if we look at, the kind of movement that has happened, so let's quickly discuss Bank Nifty. Uh, so, like I said, this is kind of a zone that I've created. Uh, I intentionally created this zone because I feel a little bit of confusion between 41 to 80 to 41 180. Okay, this is a 100 points range. So here what we can do is, so basically uh, any dip that comes until this place. Okay, so if we open flat or maybe gap down, because SGX Nifty is indicating 40 points gap down, uh, because Nasdaq fell hard on Friday. So if we open say slight gap down, and if we give a dip until 41 200, then we'll look for a upside trade. Okay, so this area is more of a consolidation place. So looks like the put positions will have been created here, and after this consolidation, we could see a breakout, at this level. What is that exactly? Let me tell you. Somewhere around this level, which is around 41,000. Okay, 41,010 or 20. So obviously, this place will be defended by them. But we have to have a stop loss, right? And we cannot wait for them to give a dip until this place and then go up. So obviously, the market will not be able to go up if we get a dip until this place, until 41,000. So the ideal place should be somewhere around 41 200. So if we get a dip until this place, we can definitely go for a put short or a like a call long. So the upside trade is what we are looking at, and we could expect the first target to be around 41 500, and then we can also expect it to move until 41 700 to 800. But for that, we need some. You'll have to depend on the option chain because we need continuous put writing on the next strike so that the market continues to move. Like I said, we have put writing and also a little bit of call writing from FI. So they are expecting the market to be consolidating with the bullishness. So you take anything around 41 200 or 210, you take an entry somewhere there, and if it closes below 41 170, okay, so 30 point SL. So yeah, SL should be around 41 170. Uh, and you can, based on that, take an entry even at 42 220 or 230, like 50 60 point SL, and then we can expect a target of 41 500 for sure. Okay, so this should be your upside trade. And when do we take a bearish trade? Bearish trade looks a little difficult because the kind of put writing that we see from them, uh, so it doesn't give me a confidence to think of a put until and unless tomorrow we directly open at 42,000. Okay, so 41 900, 42,000. Directly, if we open there, obviously we can think of put. because they would want to exit their quantity, and we can expect a downfall. So that is where we can buy put. But other than that, if Bank Nifty starts trading below 41,180, for about 10-15 minutes, then it is definitely trading at a wrong place. Okay. So then slowly, steadily, it would come back down to test all these levels, and definitely the big players would not. So here, when it comes below this level, obviously we can take a put trade, but definitely with lower quantities, and we'll have to keep an eye on the option chain. Uh, so any opening until this place, we know that we are going to be a little bullish. Okay, and any gap down, a significant gap down below 41,200, and that would be considered as a very big gap down, uh, because we close somewhere close to 41,500 and immediately you open 300 points gap down. So obviously that can be considered to be a hurting sentiment, and then we can expect the market to stay sideways for some time, so that they can switch over the position, or they can hedge the position what they have, and then you can see the next move. But such a big gap down can hurt the sentiment, and then we can plan a sell on rise kind of a trade. Okay, so this is my view on Bank Nifty. Let's quickly check out Nifty. So Nifty also similarly, uh, we have an important level at 17,730. Okay, 17,730. So if we open flat, say around 17,810 or 800, something like that, and we get a dip. Okay, if that dip comes until 17,730, like a 100-point dip, then we can buy a call here, and your target becomes around 17,840 or 850. Okay, and then there is a possibility Nifty will consolidate within this range, 17,730 to 17,850. So pretty good range for Nifty to consolidate. It will be bearish only below 17,730. So if you see this move yesterday, on Friday, I mean. So we experienced some selling, right? So if it comes back to that range again, obviously it will again experience selling. So below 17,730 or 17,720 will be bearish. So if it breaks, we can look for a bearish trade, or directly we open below this level, we'll see there will be some selling pressure, and suddenly, if you see that Nifty opens here, and if it's taking support here and then breaking this level, we can take a small call trade at least for this gap. Okay. Any significant gap up? See, let me put this on a 15 minutes time frame. This is where we fell last two times. Okay. So from this swing, we almost fell here. Again on the budget day, we went up here and fell down again here. And this is the third time we are approaching here. So that is 79.40, 950 area. So tomorrow, if we open around 79.40, 950 area, obviously we can go for a put buy here. Okay. And we can expect a target of up to 17,800. So this is one of the put trade on the higher side, and here only we will look for put within this range. No put, so within this range, I mean, and any dip to this place, as I said, we'll look for a call trade. So this is my view on Nifty and Bank Nifty for tomorrow, and I also explained what we can expect in the coming week. So I hope you all enjoyed it. Thanks for watching. Keep subscribing the channel, like the video, and also put your comments so that more and more people can understand the learning from this particular channel. Thank you for watching. Let's meet in another video. Till then, take care. Bye bye.